Good day. Welcome to Green Bicep. Today we're going to cover inflation. The report was released this morning and it came in at 6.5%. So what does that mean? Well, inflation is dropping at the highest level. When you dig in a little bit, inflation is actually still going up on the services side. So let's cover. I have a few notes I want to run through. I won't take too much time and we'll knock this out in a few minutes. So inflation has been dropping as well as employment holding steady. This means we potentially could get a soft landing. So it's smart to have some of your portfolio exposed to the stock market today. I would not be 100% cash. I think that would be silly. Number two, goods versus service. We covered services are going up, so we still have an issue. So that's why you don't put 100% you don't take a bet like that. You always scale in and scale out and have a pragmatic plan. All right, number three is CPI. We covered that. We went from 9.1 to 7.1. Now we're at 6.5. Then next we get into wages. Wages, actually the vector is down and the rate of change is improving, meaning less increase in wages. And also it's sitting at 4.6% year over year wages, but wages are coming down. That is positive for inflation. Commodities have been trading sideways for the most part, and so that is positive in current state for inflation. But the real story is China. China was in a recession for 3 years, from 2020, 21, and 2022. The recession is over, and they're open up from COVID. So we're going to see a lot of growth coming out of China. That is going to push commodities, and you're going to see currencies in those emerging markets go up. You're going to see commodities go up: copper, aluminum, steel, steel rod. You get into the detail. And then the shippers in that region should do extremely well. Extremely. Ocean shippers like Eagle or Golden, if played out 3 to 4 or 5 years. So that whole area is going to heat up, a lot of activity, and then what you're going to feel is slowly that price pressure will seep into the United States, and I'm guessing it will be 2H for the second half of the year, and then that's when the Fed's going to start really looking at it closely. And you have to decide, do we raise interest rates? They do. That's what I think will happen actually in 2024 or so, and we're going to get a real washout in the equity markets at that point. But this is all unknowns. So saying all that, a part of this too is just what other people think. Like Goldman Sachs put a price increase on LME copper, thinking it's going to go up 27% this year. And Saudi Arabia established a firm to invest in metals and mining, I believe it was. So the Chinese recession is over. Now their government is backing tax cuts. They went into effect in January 1st, and easier access to money. So that is the story today. My portfolio is designed, the list is designed to navigate the market, and that's why in a bear market, it's more of a four-wheel vehicle right now, and that's why it's structured with no exposure to technology directly. I mean, obviously all companies have technology in them, so indirectly you're investing in tech when you invest in these companies. Like what you're getting in energy ETF has a lot of technology. A good example is Shell. Shell's a big energy company. Well, Shell is actually a sponsor at, I saw this, it was quite amazing, at the Bitcoin conference in Miami. So why would Shell Oil do that? I don't know. Maybe there's something going on there. And but the idea is you design a portfolio so it's four-wheel drive, could make it through all the terrain, and that's why energy, metals, Bitcoin miners, gold, silver, Paramount, event-driven play. You get all this, and then you're less likely to get crushed when the market potentially could get knocked down 20-30%. But the darling names are typically what sell off at the top, like the Microsofts and the Apples of the world. They're the last to fall, and then the small caps will shoot out of this market, and that's when you know things are getting hot. And today, a lot of smaller ones were up today. So there's definitely a change in sentiment going on, but the fact is it's still early. Don't take too much risk. I'm happy to guide you through this market. Follow me daily, and I'll post hopefully weekly. Thank you for your time, and this is Green Bicep. This is January 12th, 2023. Peace out.